Hello and welcome to FountainFX on Friday the 25th of July 2014. We are looking at the gold against the US dollar, and we are looking at this short trade that we're on. Just really to add and build to your knowledge and understanding about order entries and order exits and how you place them. So yesterday I spoke about buy stops and sell stops, and today we're just going to carry on with market orders and limit orders in terms of how you would take profit, how you would use MetaTrader 4 in which to execute your orders. And the way in which we can do that is that if we look here, I'm using trend lines and counter trend lines in terms of plotting and managing my trade. But my entry was here where the black dotted line is, and from that level you can click. Once you've got the trade and it's executed, you can click on it and you can drag and drop and you can do anything you like. On the other hand, if you want to map out a trade that hasn't triggered, which is what we did on the first day, we were looking at it with the pound US dollar, which is obviously doing quite nicely. We're at $100 up, where basically from here I can let's say I could say when price gets all the way back up to this level, I then want to sell because obviously it's fallen from that level there. So I can place an order. I can go to new order window, I can place a pending order, and I can do a sell limit at for X amount of currency volume size, and I can do it for this line here, which is the 1323. So I could type in I want to go in at 1323 dead and place order, and look, it's placed that order but it hasn't executed it. So I can't necessarily, all I can do there is just drag it around to adjust where the order comes in. So I might want to place it all the way up there. Now if I want to modify that order, I can modify it by doing that, and I can then type in what stop loss I want and what level of take profit. So for example, if I wanted my stop loss to be just above here, so 1346, sorry, I need to do it here, 1346, and I say my take profit is going to be down here, 1290. Okay, so I modify that order, and now we've got a take profit at the top, and sorry, we've got a stop at the top. I'm getting confused now, I'm reversing everything. So there's my stop at the top. I'm saying I'm going to enter there, I'm going to have a stop at the top, and I'm going to take profit when price comes all the way down here. So that's a simple way of placing an order based on previous price action. However, the market does what the market does. So you know, it's a very ambitious one, but let's say the price gets all the way back up here and you can see that it's just moving, it's motoring up. There is no way the momentum is going to change. It is moving up with such rapid momentum, and it's going up in a nice stair pattern. So it's got a good strength, it's got a good level of support very close below it, so it's not like it's gone off to the moon and it's parabolic, and therefore it's got no foundation behind it, so it can turn and just collapse. So you're looking at how the market's moving, and you then decide, hang on a minute, this is not going to work. I can basically exit that trade or that order instantly just by clicking on it and doing delete, and it's gone. Okay, so that's very, very easy. In terms of that, in terms of this trade here, I did a market order because I was waiting for price to show me that it wanted to go lower with the break of this trend line and with this very bearish candlestick. With that, I then, once the trade was triggered, I then placed my stop above the previous high, which is here, and as price, fortunately I did, because price did come all the way back up to this level before it continued to go down. And as it's gone down, I've modified my stop and dragged it down lower to bank in some profit. So I could continue with a trailing stop if I want to. If we look here, price, we've got an area of support here, so I could have used that as a target and got out and banked my profit. On the other hand, I've been looking at a bigger picture, and I'm saying there's a potential that price could push further. Now if it doesn't, and this candlestick here closes higher, which shows that it's a break of this trend line, as in price wants to go up, then I can quite easily, if you look at the bottom here, the blue line here, this is my trade. I can just go to the far right hand side and click on the X, and I exit my trade, I bank my profit, and I'm out. And then I sit and I wait and I look for another order entry, another opportunity here, because it could turn and then push back down lower, so therefore I would continue with that trade. I might be able to re-enter the trade and carry on selling. So there's various different ways of order entry and order management that you can use. In this instance, what I have done is I've placed a target for take profit. If I go down here and I right click on my order, I can modify or delete it. So here it shows you what my stop loss is, okay, where my stop loss is at the moment, and my take profit is at 12.77. Okay, so my take profit is lower than this area, it's quite a lot lower. So this is 12.86 here, so I've got another, where's price at? 12.93. So at 77 we're literally looking at like another 200 points move. So anyway, so that's where it's at. With I could modify it, I can change it as much as I like, but at the moment I'm just letting it run. I've got some profit in here. I'm quite relaxed because price has moved in my favor. It's moved quite away. There's this very strong down bearish candlestick that formed here. Price has not really taken out this previous high here, so I'm waiting for the market to wake up this morning and start trading the gold, and we will see where it goes from there, in which case if it does whip up, I may want to exit my trade and just get out and then look for another opportunity to sell. Either that, or I'm just going to stick with it and let it go and manage my stop, or I could place a trailing stop. So if I know that, for example, the average true range for this particular for gold at this particular moment and on this 4-hour chart is, let's say, 20 points in every 4 hours, I could place a trailing stop and say if it's 20 points in every 4 hours, I might want to have my stop, let's say, 30 points away from the market, because then it gives me assurance that even if price does whip back, it's not going to take me out, and therefore I don't want to be taken out of a trade too early. So there's various different ways in which you can manage your trades. I would recommend you play around, you get used to this, and you enjoy learning how to place different trades and all the rest of it, especially on the demo account, because it doesn't cost you anything. I mean, if you look here, MACD is pushing up according to this, but if we go on to the bigger picture chart, the daily chart is showing the MACD is very much down. So anyway, that is it from FountainFX today. Happy trading. We will catch you on Monday. Goodbye.